Hi, you're listening to What's the Deal, our investment banking series here on JP Morgan's Making Sense podcast channel. I'm your host, Matthew Chan, head of JP Morgan Sustainability and ESG Engagement in Asia Pacific. And today I'm joined by Greg Zdun, head of Asia Pacific Energy, Power, Renewables and Metal Mining at JP Morgan. Thanks for joining me, Greg.
Thank you, Matt. It's a pleasure to be here.
Today we'll discuss the latest developments in the renewable space in Asia Pacific and how we see the industry developing over the next 5 to 10 years. So let's kick off by hearing more about you, Greg. You have a really interesting background, having worked at an energy company early in your career, followed by a stint as an investor in the sector before landing on the corporate advisory side in investment banking. These experiences have culminated in your current position at JP Morgan, leading the energy, power, renewables, metal and mining investment banking group in Asia Pacific and co-chairing the ESG committee in the region. Could you share with listeners how all these experiences have helped lead you to the role at JP Morgan today?
Yeah, well, look, I'd say my experience in an energy company, if I look back on it, was a very different time in the industry. It was all about the pursuit and targeting large undiscovered oil and gas resources. It was for the national companies securing critical sources supply. But, I look back on that time, we even had probably a couple of years where that was really the onset of technological advancements in all forms of renewables in Europe, whether it's in wind, solar, tidal, and wave power. And it was at a time when European oil majors began really investing in solar and wind under government-assisted subsidies. Now, that was over 20 years ago.
Right.
So I'd argue the transition began a long time ago, and I think those early investments and technology developments really paved the way for what I see now as a commercially viable renewables industry that we're seeing today.
No, that's interesting.
But look, working in the industry, gaining some of those perspectives from an investor's point of view, now advising clients across the region in navigating energy transition really highlights some of the challenges that we face as we embark on this journey. You hear time and again the importance of balancing the push towards sustainability, but energy security and affordability are really paramount, and concerns that both the industry as well as a lot of our corporate clients have in this region, but also in emerging markets.
Yes, I think this and the complexity and nuance of transition in Asia Pacific can't be emphasized enough. How have you seen the region develop in this respect, particularly in recent years?
Well, I'd say it all really started with the 2015 Paris Agreement, which really was a pivotal moment in this quest to reduce our carbon footprint. And you saw on the back of that the subsequent net zero commitments that both various governments and corporates had pledged on the back of that. And the years post 2015, we began to see the acceleration of renewables investment in the region.
Right.
And you simply look at the power sector, a staggering 50% of total global investment that's required to meet power demand for the next 3 decades will come from Asia Pacific. And that adds up to almost $6 trillion of investment. So really staggering numbers. Now, 70% of that investment will go towards the development of primarily wind and solar, and China and India really being the largest contributors.
And would you say this is limited to renewables?
No, it's not only in renewables. If I think about selectively markets like Australia, India, China, we're seeing an acceleration of utility scale energy storage, bolstering that renewables narrative and really fueling further investment. And what underpins energy storage is really this desire to have firming capacity with renewables. The emergence of clean hydrogen and carbon capture solutions, namely CCS and CCUS, I think will unlock a lot more opportunities in the decades to come for Asia Pacific.
On various measures, China is the primary global driver of energy transition investment around the world, whether we're talking about electrified transport, renewables, power grids, electrified heat, and so on. So, Greg, why China?
Well, Matt, to answer that question really requires an appreciation of just the scale of the country and its contribution to the globe. And if you think about China representing 20% of the world's population, it uses 26% of global primary energy and is contributing around 33% of global energy-related CO2 emissions. And so when you look at China as a country and is by far the largest consumer of coal globally, at over 50% of consumption, there was really a need to think about what can the country do, and therefore how can both private and public sectors contribute to arresting the increase in CO2. And back in 2020, President Xi Jinping announced the dual carbon goals for China. If you recall, we're pledging carbon neutrality before 2060 and peaking CO2 emissions before 2030. And subsequently, those goals and recommendations were embedded in the 14th five-year plan.
And focusing further on renewables, so China is heavily investing in and developing renewable energy like wind and solar. What does that pace of investment look like given the current inflationary environment and concerns regarding, say, global growth and return expectations?
Yeah, look, China's a global leader in renewables. And when you look at some of these numbers, it's quite staggering. In 2023, they installed 250 gigawatts of wind and solar assets. And when you think about the targets that they've set by 2060, they're expecting 90% of its power needs to be sourced from renewables.
Sure.
And now, while some other markets are moderating renewables targets and seeing a slight easing of investment, led partly by relatively lower returns in the sector in select markets, China's really pushed up its 2025 wind and solar outlook by over 40% based on some data that we've observed. And this growth is really enabled by low solar and wind curtailment rates, which certainly back in 2013 or 14 was a challenge. It's also led by scale and a stable interest rate environment. And that's allowed China to buck the global trend.
Right. And after a rise in the cost of delivering solar power after COVID-19, last year then saw a dramatic reduction in solar module prices. What has this latest development across the region done to the market, and what is your expected outlook?
Yeah, look, that reduction in solar modules has really been driven by a number of factors that we've observed, including increased domestic competition for supply. If you look at the drop in the module prices, that was about 50% based on some information that we've seen, and a doubling of solar deployment in the Asia-Pacific region. If this continues over the course of this year, we expect that we'll see another record year for solar installations. So the backdrop is obviously very encouraging and expected when you have such a dramatic drop in a key component of the supply chain.
I see.
Now, solar power ranks only second to coal in operating capacity in Asia Pacific. And we expect that to overtake coal by the turn of the decade. So really, we're not far away from that event occurring, certainly at the pace of the installations that I referred to earlier. But more importantly, China is still in the early innings of solar adoption. Solar power only really contributes about 5% of total installed capacity in the country and ranks behind Australia, Japan, and India. Now, if you look at Australia is now at about 20% of total installed generation capacity coming from renewables, albeit it represents a much smaller market. So there really is a lot of potential for China in the years to come.
And what other markets in the region do you see becoming leaders in the space, or at least becoming very active with regard to the deployment of renewables?
Australia and Japan, I think, will continue to see significant activity. And if I look at the Australian energy market, they've gone through a period of unprecedented volatility in their energy markets and really a need to accelerate the deployment of renewables to replace the planned baseload closures, which is namely coming from coal. That will effectively necessitate significant firming capacity. And much like India, Australia will see the emergence of transition investors, whether it's global infrastructure funds, sovereign wealth funds, pension funds, but also global strategic players predominantly out of Europe.
Right.
Now, in Japan, we've seen now a number of significant M&A transactions. There's been 4 in the last 3 years, all north of $1 billion in terms of transaction size. And that's largely led by domestic incumbents looking to secure renewables to fulfill their own near-term goals. And that is obviously aided by the low cost of financing in a country like Japan.
Well, that's terrific, Greg. It's always great to spend time with you. I've really enjoyed unpacking energy transition and the outlook on renewables in Asia Pacific. Thanks so much for joining me today.
Thank you, Matt.
I thank you also to our listeners for tuning in to another episode of What's the Deal? We hope you enjoyed this conversation as much as I did. I'm your host, Matthew Chan. Until next time, goodbye.